Good morning, traders. It's 8:01 a.m. Chicago time on Wednesday, the 4th of May, 2022. This is episode number 2226. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, looking at the pre-market summary sheet from Convergent Trading, we know we have the FOMC rate decision today. That's the big piece. There were some surprises overnight. We did see that uh, the Indian Central Bank convened and had a surprise rate hike, which has really beat down the Indian equities market. This is another in a string of banks having to react urgently to inflation. EU has put forth its proposal for the Russian oil ban. It is giving some of its member states, member countries, more time to wean off of Russian oil. You could see the reaction in crude oil up 4.13% this morning. The other big headline is the China COVID restrictions easing. We see more manufacturing. We see more manufacturing coming in. Being permitted to proceed to resume, and that should help relieve some of the supply pressure and pricing there. Again, the FOMC rate decision today at 2 p.m. Eastern, the press conference at 2:30. The expectations for the FOMC rate decision is for a hike of 50 basis points, bringing the Fed funds rate to 1%. We did get ADP this morning. ADP came in pretty light. Was expected to be at the consensus was 395,000. The forecast was 430,000. Came in at 247,000. Don't forget that this Friday we get the U.S. non-farm payrolls, and the ADP number is loosely tied to it. Balance trade for the U.S. came in at a whopping $109.8 billion deficit for the month of March. Just ginormous. Was the forecast for $92 billion deficit. The prior is $89.8 billion. Just a tremendous balance trade deficit there. Huge. Just troubling in my opinion. At 10 a.m., we get the ISM non-manufacturing PMI expected at 58.5. And then this evening, we get balanced trade out of Australia, expecting 12 billion Australian dollars. And of course, we do get crude oil, the EIA crude oil reports coming out at 10:30. So relatively busy day. We see that overall the indices are quite muted. We have an overnight posture that is mixed. We are still trading in range, so let's redirect our attention to the S&P for a minute. The box in the middle of the screen here, ES overnight status. The auction condition is balanced. We are really having a balanced auction here. Point of control is shifted up to 185 from 178, something like that. The inventory is 97% long. 97% of the volume traded, the number of contracts traded, occurred above yesterday's settlement, so we call that 97% long. And the range is only 23.25 points, back in line with what we would consider to be normal. You could see the mode of the range over the last 252 sessions or 1 year is 23.5, so it's right in line with the most common number in that metric. The point of control 41.85 is higher than yesterday's point of control, which is higher than yesterday's overnight point of control. So we see values being accepted a little bit higher in the day session as well as the night session. Okay, so that's a lot to throw at you, I'm aware, but really we need to pay attention to what's coming here. The market is very likely to be choppy and whippy. this morning as participants shuffle their risk around. If you look at your, even if you look at your NASDAQ chart, despite the fact that the NASDAQ had some major earnings this morning, like Moderna I think is up. Last I looked, it was up about 5%. And there were many reports this morning. CVS came out, Airbus out of France, Johnson Controls, CDW, Moderna, Marriott, International, Regeneron, Yum Brands, and many others. Hey, Ferrari came out this morning and beat as well. In the post, in the aftermarket, we have Energy Transfer, MetLife, Allstate, Uber, eBay, also many others to release. So earnings still in play here, and the market is responding to those. There's some big ones after the close as well. So let's take a quick peek at yesterday and the expectations that we had yesterday. The primary expectation is a pullback to around 41.45, that area. This area right here, this stock zone right here, was looking for a pullback, and then I was looking for it to catapult out to push the 41.76, chop around, and then ultimately end up at the 00 and potentially push to the 14. That was yesterday. Expected it to get entangled in the single prints of 41.71 and 41.78 with the overnight high of 41.76. A couple of really decent trades yesterday, in my opinion. Here's the review segment. Pretty sideways. Remember, we talked about, we had a little bit of a pop quiz yet again. I know you guys are being quizzed a lot, but I just want to make sure you're following along and are able to make your own decisions by watching the Trader Bite rather than just being fed my opinion, and that's all it is. It's an opinion. But yesterday we had this funky kind of open auction, totally as expected. Started to put in higher lows, but you could see that the swings were pretty deep, right? So it was zigzagging quite deep, pretty tough picking areas early on. But once it broke the IB here, so the IB was broken, but once it broke the IB and held above, the mid trade was dominant yesterday. You could get 2 scales off on the mid and cover risk completely before it ran. We did have a few whipsaws in there. There were some interesting whipsaws, and just like the trade we talked about from the day before, we had this impulse down right there, impulse down, which was immediately refuted, higher low, and that sets up a long from here, which worked out pretty well as well. That's a nice little setup. That's a V bottom setup. We don't often see these, but we do have quite a bit to price in and quite a bit of volatility. So we're seeing these relatively often in the last couple of days. So pretty interesting. We ended up with, this looks like a thin profile, but that's because I'm restraining the width of it. But this was a very boxy profile yesterday. So that tells us that there was an active auction throughout all of these prices. We ended up finishing above the IB, but this was a normal day type point of control up above the IB. But in general, we see VWAP, mid, confluence, pretty balanced day. We see the point of control against the mid. We see settlement against the point of control, mid, VWAP. This tells us that this day was pretty much can be recorded as a balancing day. The delta held pretty well throughout the day on the positive side. There was pretty decent buy aggression, but overall I wouldn't read into it too much. Coming into today's session, the orange profile, you could see that overall it's just a balanced profile. It's got this weird knob here at 41.85, quite a bit traded there. But overall, we had a point of control down here until about 15 minutes ago or so. The point of control was in confluence with the mid and the VWAP, and then it broke higher and it traded a little bit more to move the point of control higher. But we are inside of the prior day's range. We are above the mid and so on. So this is pretty much the same setup as yesterday. We talked about this yesterday. We won't do a pop quiz again. But we talked about this yesterday in that the expectation is it's likely to drop into the prior settle, test that out, potentially poke through, come back, consolidate here, and take out this overnight stat early, potentially the overnight high as well. But overall, the expectation is it's likely to be very, very choppy. Okay, so that's what we want to pay attention to. Looking at Edge Pro X for a minute, I'm just gonna look over at the TPO chart just to get a bigger picture reference. So I'm using TPO charts much more often these days because of the additional volatility and because the trade is noisy. We fall back on using time to describe what's going on. And if we use time to describe what's going on, it becomes a little bit more clear. It's not as precise as volume profiles. But again, taking it back from the narrative, we sell off, so we're moving value lower, and then all of a sudden we start to stabilize and push higher, and this is where we expected this to continue back into 43.60, right up here, right? This is the key target on the upsides, 43.60, key target. The first key target is 42.14 down here. That's this baby right here. So the immediate target and the magnet right now is 42.14. That brings us in line with this auction, and this makes it so that we poked below into 40.60 and we came back up. This was a clear rejection. You can see that right here. Talked about this yesterday. A clear rejection of lower prices. You can see the taper happening here. So the expectation is we push to 42.14. That's a key number to have to discuss. But once it gets up here, if it's able to use that as a base, here, then we're looking for the long to push through the 43.03. Is it from last week? Let me look that number up. Whoa, look at that. 43.0350 is the prior week high, but really we start to then work towards 43.60. That's what's expected. These are all expected to be treated as dead cat bounces. In other words, we're expecting these bounces to be refuted because there's a massive risk overhang. The fact that the Fed is draining is tapering its holdings while raising interest rates and so on. That's just a lot for the market to deal with, and it's pretty hard to climb through, although the market can do what the market wants to do. So based on this, you could see we were in a balanced day yesterday, right? So we've pushed higher, and we're opening right here. This is the current, this little white tab here is the current real-time price, and we are still above the point of control. So just keep in mind what's going on here, what the price map looks like. We're still battling to get back up to 4,300. We're still battling to get back to 42.14. 42.14, and then once we get to 42.14, we start to work ourselves through all of these prices in this thin volume zone. The reason I go to time-based profiles versus volume-based profiles, again, is because time-based profiles are much, much less accurate. We're using a 30-minute block, 30-minute TPO, time price opportunity. Each one of these blocks is 30 minutes long. We're using 30-minute blocks as opposed to actual volume. When you go with actual, and I use these for a bigger time frame. Think of like Why would I go with a log chart? When I look at a long-term chart, you don't want to use a standard chart. You want a linear chart. You want to use a log chart. You want to describe the movement in terms of a log change or a percentage change, so to speak. I look at TPO charts the same way. When there's a big picture to look at, TPO charts tend to represent it much more much more easily using gross, like not so specific or refined numbers, using gross numbers. That's why I'm looking at TPOs. I can do this on a regular composite chart, but you'll just see a lot more detail that isn't really relevant at the moment. So that's that. Looking at the migration on a volume chart and looking at how things are responding versus the weekly levels. The volume profile should come up here in a second. The connection at home is not as fast as the office. The office has a 1 gigabit fiber line, and it takes about 2 seconds to load the chart. My home connection is much slower, so it takes a while to load this. Not sure why the volume prints are not loading. There they are. So see how thin this is. It's not very descriptive. The profiles here are hard to see and so on. So we go to TPO just to be able to describe it. See how the 14 doesn't stand out as well as it does in a TPO chart. You have these additional. If we need detail, we go to volume. Right? As I day trade, I'm looking at volume charts. But as I'm looking at a big picture, I don't need that much detail. I don't need to look at every zigzag or jagged part. And so that's why I shift over to TPO. Yeah, there's an echo here because I don't have anything in this room. So you can see that we're working ourselves. We're back into last week's range. We're above prior close. We're in prior week's range, and we're really making good progress with higher lows, pushing higher. So for today, we're going to really, the goal for today is to keep our powder dry and to be prepared for the FOMC. It's important to not overcommit to trades early. This is another day, by the way, given the way the market is opening, this is another day where we should probably sit back the first 20 minutes or so. Audio doubling. Okay, that's interesting. 1 second. Let me just check something real quick. Not that it matters at this point. Yeah, I'm not sure why the audio is doubling, to be honest with you. There's nothing here that says that there are 2 mics turned on. There's only one. So I'm going to leave that alone. Okay, so what are we looking for today? Today, again, opening in range, right? In the prior range, we're opening in value. There's the value area right there. These 2 orange lines, we're opening in here. We're opening against the point of control, the VWAP mid. This is likely to be noisy, looking for chop. I'm looking for it to drop into prior settle, right? Prior settle is 41.20. 41.69 quarter, 41.69 quarter here, prior settle, push into this area. Look at this support resistance area right here, push into this test, and then ultimately resolve to get the overnight point of control, and then push to 4,200 to squeeze through, and then we get the FOMC. And it may not do any of that until the FOMC. Don't be surprised if we are stuck here until 2 p.m. right in this kind of yesterday's range. But overall, the primary scenario is for this thing to push higher off of the FOMC and to start moving back to 42.14. The market's already priced in. We already know what the Fed is going to do. It'll be a surprise. It'll be a surprise if they go 75 basis points. 75 basis points. That would be the surprise. Now, the market's already pricing in a higher probability than before of a 75 basis point hike. Okay, so it's on deck, but it's not expected. Now, if we get the 75 basis points, we end up with the same prior, and this is likely to push right into the 40-50 mid-century is the next key LVN, and that becomes the key target on scenario 2. Remember, the Fed, general moves in the Fed are 1, 2, 3s. You get the algos pushing first. You get the quick profit taking, and the real move occurs after this first move. So it could be inversed or whatever, but at the end of the day, we're looking for that third move. We're not trying to catch the first move. We're not trying to catch the second move. We're trying to catch the third move. It is my advice to you that you should keep your hands off the mouse for probably the whole period from 2 to 2:30, and let the statement be read between 2:30 and 2:40 by Jeremy Powell. Let the statement be read. That's going to introduce more volatility, and then look for opportunities. You'll still have an hour and 15 minutes to do something with the day if your trades show up. But don't be in a hurry. But if you do trade the Fed, really, it's a whipsaw. It's a whipsaw, and then there's a continuous. So we're looking for the big impulse, and then we're trading the pullback of that impulse on the third move. Okay, so those are the ideas for the day. Good luck, and I will catch you tomorrow morning. And please do not blow up. If it's too stressful, or if you feel like you have FOMO or getting emotional about the Fed and maybe missing the trade, please don't trade. It's better to sit this out. Okay, good luck.